Here are 3 reasons why a private limited company is better as compared to a limited liability partnership if you are looking for a business entity which has a separate legal entity status. I am Yashwant Nitgal, a chartered accountant in practice. Every week I post one video which will certainly provide you with valuable financial insights. A lot of my clients come to me with a business idea which is customer facing, and they tell me that they want to start an LLP and never talk about incorporating a private limited company, because the common misconception is that a private limited company involves a higher compliance cost and comes with a lot of restrictions. So though the restrictions part is true, there are several advantages which tips the scale in favor of a private limited company, and I'm going to be talking about these advantages. The first and the biggest advantage is the taxation part of it. While the income in case of an LLP is taxed at 30%, in case of a private limited company, the standard rate is 25%. However, there is another section which you can take advantage of in case of a private limited company, which is section 115 BAA, wherein if you comply with certain restrictions posed therein, the rate of tax will be reduced to 22%. And from my experience, most of the companies do fall under this category, and you will have to pay just 22% in taxes every year. Just to give you an example, if your income is over 1 crore rupees, in case of an LLP, the tax rate would be 30 lakh rupees plus surcharge, and in case of a private limited company, it would just be 22 lakhs plus surcharge, which is close to 8 to 9 lakhs in savings. The second point would be with respect to restructuring, wherein if you have to transfer part of the shares to anyone else, any third party, or if you want to bring in someone else as a new partner or a shareholder, it is much easier with respect to a private limited company, and I'll tell you why. In case of a private limited company, all you have to do is either allot shares to a new incoming partner or transfer some of the shares of the existing partners to the incoming partner, which is pretty straightforward. However, in case of an LLP, you will have to do a reconstitution of the partnership, and you will have to prepare the financial statements as on the date of the introduction of the new partner or cessation of the existing partner, and this is definitely cumbersome. The third advantage would be with respect to the preference of investors, whether it is PE, VC or angel. They definitely prefer a private limited company because of the restrictions which are imposed on these companies, whether it comes to granting of loans to third parties or taking loans from unrelated parties. These aspects are very well restricted in case of a company. One might look at these things as restrictions or disadvantages, but if you are someone who is looking to raise funds in the coming years, I think a private limited company would be the choice of preference for the investors. With respect to restrictions in case of a private limited company, there are certain practical challenges. For example, if you are in the real estate business or any business which requires constant pumping of working capital, you will have to definitely take funds from related parties or unrelated parties which are not financial institutions, and these possibilities will not be available in case of a private limited company, but in case of an LLP, there are no such restrictions. So if you are able to run your business within this framework, I think a private limited company would definitely be more advantageous as compared to an LLP. One more restriction is that in case of an LLP, the partners can definitely take loans from the LLP to and it will be shown under current account. But in case of a private limited company, the directors of the company cannot take any loan from the company as it is specifically restricted. A lot of people believe that the compliances in case of an LLP is much lower as compared to a private limited company, which is definitely not the case, because both of them more or less have the same amount of compliances. So if you are looking for a business which does not have the need to borrow from unrelated parties, and if you're going to invest your profits back into the company, I think from a growth perspective, we should definitely consider a private limited company as the first option. And as always, no tricks, no hacks. Follow me for valuable financial insights.